I've been day trading for over 10 years now, and I've had the big days. $10,000, $20,000, and my biggest prop firm payout ever is $50,000. You can see the results right here. And unlike most people on the internet talking about trading, I actually trade live every single day for free right here on YouTube. The reason that you haven't seen the results you want, or that maybe you're still not profitable, is more than likely not your fault directly, but the education that you've received. Everything that you've been taught has been to sell you a course and overcomplicate your trading. And that's the point of this video, because I think most traders are making day trading way more complicated than it needs to be. Every year there's a new strategy, a new indicator, a new guru telling you that you need to learn some 47-step system just to take a trade. I don't trade like that at all. My strategy comes down to finding a few really good opportunities, waiting for price to come to me, getting confirmation through price action and volume, defining exactly how much I'm willing to lose before I ever enter the trade, and then executing. That's it. Because after doing this for years, I've came to realize that strategy isn't what destroys most traders. It's everything they do when they're not following it. Taking one more trade, moving the stop loss, chasing a move that they missed, sizing up because they just lost, turning a perfectly good green day into a red one because they couldn't walk away. That's why everything I teach now comes back to one idea, DOD. Discipline over dopamine. So today, I'm going to show you the exact way that I day trade in 2026. From my levels, to the setups I look for, to my entries and confirmations, all the way down to how I manage risk and know when I'm done for the day. This is not about finding some magic strategy that never loses. It's about building a way of trading that you can actually repeat. Let's get into it. Now, as I mentioned before, guys, it's 2026. The days of complicated strategies and buying expensive courses to learn 47-step systems are over. All it takes to day trade profitably in this new age of trading is 5 simple concepts. And in this video, my ultimate goal is to make sure you understand each of them so simply that you can execute this strategy and system as soon as tomorrow. Now, in this day trading success blueprint for 2026, I'm going to cover these 5 key concepts. The first being price, volume, and key levels. That is all you need in terms of strategy. We're next going to cover the KMFA protocol. Then we're going to discuss visualized risk, your consistent approach, and then go over how DOD, discipline over dopamine, ties everything in. Now, every day when I come on, I have a strict protocol. I mark out several key levels. Those key levels include pre-market high, pre-market low, 15-minute high, 15-minute low, Asia high and low, VWAP, and point of control. Now, of these key levels, these are our primary levels. Pre-market high, pre-market low, 15-minute high, 15-minute low, Asia high and low, with our secondary levels being VWAP and point of control. Now, for me, I use an indicator to mark these out. So this is what it looks like for me at market open every single day, and I'm going to break down a real trade for you that we took in real time in front of thousands of my students. We first are going to go and add the levels in. I'm not here to sell you an indicator. This is just what I personally use. We're going to make sure that our Asia high and low are showing here as well, and we're going to wait for the market to confirm beyond our danger zone. Now, for me, the danger zone is the first 15 minutes. I do not trade the first 15 minutes, I'd say 99 out of 100 days. I am a trend trader. I'm a simplified DOD trader, which means I want to catch more trends. I don't want to go into my trading day guessing and consistently missing and stressing myself out over which direction price is going to go. Instead, I let price tell me which way it wants to move. So we let the market open and let the first 15 minutes settle. Now, as price settles and moves in, we get 3 of our key levels. We get our 15-minute high, 15-minute low. We already have pre-market high and pre-market low, and this is going to serve as a map. Now, as price moves for you every day, it's going to tell you a story. Your job is to dissect that story and find the best possible entries for your trades. Now, at this point, you notice that we have consolidation in the first 15 minutes, and then we start to get aggressive movement on the 5-minute time frame below the 15-minute low. I almost always use the 5-minute time frame for this strategy, with 15-minute time frame pulled up next to it for confluence. Today, we are going to focus on the 5-minute time frame. Now, once this closes below the 15-minute low, I want to see 2 things. Ideally, in this particular situation, we're right at VWAP, we're right at 15-minute low, so I'd like to see us have another continuation candle down below these levels, retest back up, try the shorts, and then move down. At this point in time, that is what I'm looking at. And it's also important to be said that I don't know where price is going to head. Every trade that I take has risk on it. That's the reality of our job. We want small losers and big winners, and we are risk managers first. Now we let price continue to play out. And as price plays out, we get a second aggressive candle down. Now at this point, this is where we are going to take our Fibonacci retracement tool, draw from the high point to the low point, and we are going to want to see a move back up into this area for shorts with stop loss on this trade above our trend setting candle. Now, on this particular setup, we're looking to catch the trend move down. So we want to see a price move up, find a lower high, have sellers step in, and then see price continue down to our pre-market low price target, and then continuation to the downside. This is not a complicated setup. It's not a complicated strategy. We are looking for one simple A+ setup on a lower high on this downtrend to give us a high probability entry and get us paid for the day. So we know our plan. Now we let price play out and we trade the chart, not our heart. As you see here, we move up. We get this entry right here. We take this on the live stream. We enter the shorts, and now our job is to wait for us to either A, get stopped out, that's always a potential option, or B, get continuation to the downside. And as price moves, we see us reject there, we get the nice movement down, and at this point, when you're trading this exact setup, you know that you have 40 to 50 points of risk, ideally 30 to 40 points, and on this, we've moved from this area right here nearly 100 points. Now, this ends up being a good entry too. We get a break through Asia high. We get a breakdown here. We go to pre-market low. I don't love sweeping pre-market low, but sometimes on these setups as well, you'll find the bottom point here, move back into these key levels and continue down. Now, we've already made our money at this point. We got the retest. We got the move up. And now our job is to manage our risk on this trade and let our trade work for us. Now, I'm also a very risk-on trader, meaning I am always playing defense. That's why when we see something like this, we get the move from 670 all the way down to 570. 100 points on this move. I'm okay with catching this piece of the pie. I don't need to catch from here to here or from here up to here. Just like Thanksgiving dinner, you don't have to eat the whole pie. You should be fine with a slice, with 2 slices. And if you treat it the same way in your trading and focus on base hits, good things come. So we take this trade, we get a piece of this. Ideally, I would have wanted to see us continue making lower highs and moving towards Asia low, but I'll still take 100 points, only risking 30, 40, or even 50. And that's where the KMFA protocol comes in, to keep my fund alive. If you guys are trading on prop firms, you know that your number one job is risk management. When you focus on that, and when you focus on position sizing, and when you focus on your risk first, you get more payouts. You don't enter into the prop firm hamster wheel where you're constantly buying more evals and finally passing and then blowing your funded account. My job for you as your discipline mentor is to keep you being a liability for these firms. So in the KMFA protocol, I always say that you are going to put your daily risk at 10% of your drawdown. So if you have an account, a funded account that has $2,000 of drawdown, that means your daily risk is $200. And I understand that seems low. Yes, you're going to have to trade micros. Yes, you're going to have to be more patient. But I want you to have a better chance of getting paid out and spend less on prop firms rather than continuing the cycle of blowing money and being a liability and being a reason why these firms make so much money. The KMFA protocol says 2 max losses a day. The KMFA protocol says 2 confirmations on each trade that you take. The KMFA protocol says 1 to 2 good trades a day. When you end up implementing all of these different protocols into your trading, good things happen for your funded accounts. It's the same reason why I was able to put in $1,000 and spend into Lucid and FFF and get nearly $10,000 in payouts my first ever time trading with either of these firms, which Code JDUN works for all of these. I appreciate your support. I try my best to help you become a great prop firm trader and a great live account trader and do your best on these, spending minimal and making as much as you can. Now, in that whole process with the KMFA protocol, we also have visualized risk. Like I showed you here, this trade is a prime example. Every time I take a trade, I want to be able to visualize my risk. And what that means is I can see where my stop loss is and I can see where the trade is no longer valid. If you enter here, you know if you go above this candle high, your trade is no longer valid. We breach this, This lower high is no longer a lower high, and we likely move higher. So every single trade that you take, I want you being able to have visualized risk. I want you being able to focus on having A-plus setups, which leads us to the next piece of this. This got deleted for a second. Our consistent approach. I want you guys to come in and be able to approach this consistently every single day. No guessing, no running back and forth with positions, no tilting, no revenge trading, no going off the path that you know leads to success. You come in every day, you plot your key levels, you catch more trends, and you do your best to stay systematic. A majority of traders' problems are not strategy. I can show you simple strategy that tells you where trend is going to move a lot of the time. Most traders' problems are with their psychology, with their discipline, with their execution. And that's where I truly believe, and I think if you go to my live stream every day on YouTube, they'll back this up. We have the #1 free live stream to help traders with their discipline. I do this every single day for free for you guys. Yes, I have a premium chat. Yes, I have a disciplined trader program for very serious traders who want more of my time. But I also offer free live trading and discipline help every single day for free for you guys to help you with the KMFA protocol, to help you with visualized risk, and to help you keep a systematic, consistent approach. Which leads us to DOD, discipline over dopamine. Your job as a trader every single day is to prioritize your discipline over cheap, garbage, self-destructive dopamine. Dopamine causes boredom trading. It causes revenge trading. It causes tilt trading. It causes you to have 5 green days in a row and throw it all away with a 6th red day. The pain of breaking your discipline is often a result of dopamine taking over. You have the ability, you've seen glimpses of it, where you trade really well for a week or 2 weeks, or you get a payout and then you go on a cold streak. When if you stick with the DOD program and you stick with consistency in your trading, and you don't let dopamine creep up and make bad decisions and boredom trade and tilt trade and revenge trade and break every rule you have for yourself, great things happen. It's slower, it's boring, it's certainly not as fun being disciplined and waiting for an hour or 2 hours to trade or taking 1 trade a day, but I'd rather have myself and you guys have a boring strategy that you have money to spend outside of your trading than have a fun strategy that you have no money to spend. That's what you got to think about. The pain of your bad mistakes and the pain of your inability to follow your plan must be far greater than the pain of being a disciplined trader. I help traders every single day throughout my various streams and programs become disciplined, become consistent, and trade a systematic, easy-to-learn approach. All you have to do now is hit that subscribe button, hit that like, and if you'd like to learn more, make sure you tune in to my free live trading every single morning at 9:30 a.m. Eastern Time, right here on this channel, or click the link below to see if you're a fit for the Disciplined Trader program. Either way, we have something for everyone. Thank you guys so much for being here. I hope you got value from this video, and I'll see you in the next one. God bless.